Hello everyone, it's Calvin. Thanks for checking in today's video. Today is Tuesday, July 30th, 2013. Hey guys, everyone, I'm back for a quick update for you guys. Haven't done a video for I believe a week or so, so let me do a quick update what I'm seeing on the SPY. Let's start that off. It looks like we're still holding this range. My measurement pretty much came out to roughly 168, 169, and pretty much, yeah, we've stalled in that area. The measure move did take us out there. I did was a little premature here on the short because of this big down. See how this huge red selling candle on volume. So I did nibble a little bit SDS here. I did stop out once it broke above this. The 52-week high, I believe, or actually after this consolidation period, I went ahead and re-entered here on short-term SDS and E-mini, so shorted that right there and just took profits as soon as it hit support, because right now I don't think this market's ready to fall yet. It looks like it wants to consolidate in a range right here, and that seems like what we're doing right now. So we are pretty much very strong. I mean, we made this big up move and we're still holding the very high base. We didn't even make a 25% retracement, or let alone a 382 retrace, which would be the 50-day moving average. So this is really strong at the moment. It's really holding this tight range. So it looks like it's building cause to go higher at the moment. Notice how we did break the May highs, and we poked our head above it for like 3 days, and then we crashed back down. And now we're kind of making after that. See, notice after that breakdown, all we've done is just stalled below it. So we can't see this yellow line. We can't get above it. So that's obvious that this 52-week high is resistance once again. After failing to break out, it came back in with a red candle. The volume was decent. It's been higher since the last 4 days. It's been higher volume. I believe how many shares it was. Let's see. It looks like we have. Where's the volume? Sorry, I gotta put my. It looks like the volume is 112 million shares right here, so higher than the previous last 4 days of trading. So that's not a great volume sell candle, but nonetheless, that is a breakdown candle, because that's the candle where we broke down over the. We failed to break over that 52-week high in May, okay, and now we're just consolidating sideways. So that could be a bearish, very micro inside a bigger bullish pattern. But nonetheless, it is a very small bearish pattern, which does measure out to gap window, which is right here, guys, at the 166, 167, 168. I'm sorry, 166.87. So roughly in that range, roughly in that area, which coincides with the 50-day moving average. So even if that did play out, it's still within a bigger bullish consolidation pattern. So even if that did play out, it's still this bigger pattern is still in place. So that you could look for that in the coming days. But Wednesday is the FOMC meeting, so let's see how that all plays out. It's gonna be a wild card right there. But I'm pretty much standing on the sidelines, neutral at the moment right now, just waiting for what the Fed has to say. So that's pretty much the wild card. Nonetheless, I am looking to reshort this at the 172, because I've been calling out this bigger macro trend line, this channel, upper channel, which extends back from 2009. So it's going to be major. So it already hit it once, and it does look like it wants to retest that upper trend line over here, which is at roughly the 172. So I did sell some 172.5 call spreads, just to get me in already on a small position. If it does poke its head up there, I think that is going to be resistance, okay, guys, even on a bigger time frame. And then obviously everyone knows that if you look at stochastics and RSIs, we're overbought. We're well overdue for a pullback. See how we're on the upper range of this stochastic. Doesn't mean you're oversold. Overbought doesn't mean you can't go higher. So I'm anticipating a little bit, further upside, and that will be where I take another shot on the short side. Right now, I've just been scalping pretty much short-term day trading for a few crumbs here and there. Let me go over actually some of the day trades that I've been the last 2 days, for this week, since I've been back for video this week. Very simple on this move here, guys. This was actually on Monday. Beautiful up move from Friday, on light volume. Ever since that 8 o'clock time frame came up. Let me check. Let me make this. Get rid of this MACD and stochastics, which I don't really use on the intraday time frames. Occasionally I do, but they're not my main factors to trade. I use them as secondary factors. Okay, guys. So it looks like you have some tweezers here, tweezer bottoms, if you want to call them, or two tail candles, and we made that beautiful drop on Friday, and then as soon as the light volume came in, You gotta look at time frames. As soon as around 8 o'clock, that's when the light volume kicks in for the rest of the Friday effect, and beautiful retracement. Pretty much made a 100% retracement from the gap down, and we pretty much closed actually above the 52-week high actually. So that was a nice little fake out, and I actually went short here on this day, and obviously on Monday I took profits here beautifully. And I just trailed it all the way down. So that was a beautiful trade. And then on Monday, I actually played on the low. I played again the 8 o'clock to 8:30 time frame. Same, and this is specific standard time, okay, guys. So it would be around 11:30 Eastern Standard Time. Everybody knows this. That's when that's when lunchtime comes. That's when the volume gets light. A lot of the institution, the big boys selling has already been taking place. The higher volume selling has already been done, and this is where they say when a cat's away, the mice play. So this is a nice doji candle. We have a beautiful time count here, guys. If you guys know time counts, this is a perfect time count into a 61.8 Fibonacci retracement. See how you add all this stuff together? Let me just redraw that fib. Let me get rid of this current fib I have right now, so I can clean up this chart a little bit, guys. Sorry, I don't have it perfect right now, but let me just draw this fib very quickly so you guys can see how I line up all these factors and just pretty much find the low of the day and just ride the gains up. Beautiful thing. So so this is on the Friday. Beautiful move, retracement, 61.8 Fibonacci retracement. It's also the low of this gap down, so made a small pivot there. So that's another factor. Time count, doji. Okay, dojis are known for being reversal channels. Japanese candlesticks are very important as well. And look at that beautiful move. Okay, guys. So trim and trailed there. Beautiful. Got out near the 200 moving average. Okay, and again, I didn't short up here. I don't get up that early sometimes in the morning to trade. So I just waited for the beautiful. Once again, this wasn't the correct time frame, but then I saw a beautiful little doji here. See, on heavy volume. And it also met the measured move based off what I'm seeing here after this breakdown. So basically, in this general vicinity, a lot of amateurs will play this gap fill, but if you see that the consolidation has been making, that it could easily pierce through it. Okay, guys, and that was a beautiful breakdown here through these moving averages, and pretty much caught support right at my level. After seeing this, I thought it was gonna be a 3-bar surge here. That would have been also perfect to a double bottom, but that didn't happen. But when I saw this doji developing, and on high volume, this is what I did. When I see something like that, this is what I did. I waited for a 50% retrace of this candle. Got in right here. Went a little bit lower. Tried to fake me out, but as long as it closed back above inside this doji or this bottoming tail, or what do you want to call it, hammer candle, whatever you want to call it, it's all the same. It's just doji, hammer candle, same stuff. As long as it closed back inside that candle, it's good to go. And sure enough, it actually made another hammer candle. So I knew this was perfect trade. But I trimmed some here because it failed to close above it. It failed to close above the bottoming tail, so I kind of held it, and sure enough, I took it off right here at this at the pretty much the flat line of the day, because it was making a bearish pattern. Okay, and the market did look weak below all these moving averages, so that was a smart trade. That was resistance clearly as it consolidated, and it did bust through it and pretty much retested that resistance, now support at the end of the day. Okay, so those are the day trades I did. Really quick, guys, just to kind of just give you a sense of how I day trade, just putting multiple factors together, and it pretty much was a retest of this, almost just a higher low here off this pivot. Okay, guys, so I knew this was going to be support, and especially when I had this pivot just below it. Okay, so that was a beautiful trade there. Some nice crumbs for day trades. Back to the daily chart. Like I said, it's still making that in the more bigger macro sense. This is a bullish consolidation here. You could make a case that it's just pretty much sloppy. I mean, you can make a case where this could be a head and shoulder as well. It's not great, but it hasn't formed yet. But if you look, let me zoom this back out. Okay, this could be your left shoulder here, and then the huge head, and this would be your neckline here. All right. Huge head, and now you're in the makings of a right shoulder. Okay, so let me go on a bigger time frame. Let me go on the hour chart. You can probably see it better. It looks a little sloppy. If I go on the hour chart, you can probably see it a little bit more clear. Let me see. Here we go. Right. Gotta zoom back out still a little bit. No, it's actually over here. Sorry about that. Right here. So let me actually make I have a lot of trend lines, so let me make this actual neckline, potential neckline, red so you can see it more clearly. Here you go. So you made an up move. Off that gap up from, I believe, the Ben Bernanke's speech gap up. So, and then you made a pivot, made a huge head, and it just could be another right shoulder. And that breaks down. If that breaks down, guess where it takes you? Right for that gap fill. See how the measured move, how measured moves have so much symmetry in the charts where it actually takes you to the gap fill. And also there's the 200 moving average on the 60-minute chart. So that's going to be some solid support. It all changes, day after day. So this 200 could rise in the next few days. But, there could be a catalyst Wednesday, see if, the markets get a little jittery after Ben Bernanke and the FOMC meeting. Okay, guys, let's see what happens in the coming days. And there's also GDP numbers and the jobs number on Friday. So there's a lot of catalysts here that could pretty much cause a little panic in the markets. Okay, so that's what I'm seeing, and also have a 50-day moving average on the daily chart. So you line up all this stuff, that's going to be some solid support. If it hits that, I'll probably sell some bull put spreads below this consolidation here. That's the way you trade it right there. You could even go long for a day trade, but also on a swing trade basis, just to be sure, because you never know how long this might hold. It might consolidate and break through. As long as it gives me 3 days, I could sell some bull put spreads below this consolidation pattern, as there will be bounces along the way, and those should be perfect. Okay, guys. So that's what I'm pretty much looking at. Let's look at IWM. I pretty much spent 11 minutes on the SPY. Let's take a quick run at these other indexes very quickly. Actually, the IWM does look like it did break already. You know how it led to the upside? Now it could be leading to the downside. Look, I've already made this top. If you look at an intraday pattern, you can somewhat see a head and shoulder pattern also on the 60-minute chart. See, and it's already broken down. See, look at this. If you draw this neckline right here, and let me make it red again so you can kind of see exactly what I'm looking at. So if you kind of see these charts forming on intraday time frames, you got to be kind of aware that it could be the making of a small move within a bigger uptrend, and that measure move does take you, and it already broke them down right here and it's consolidating. So here's your left shoulder, big head, and now right shoulder, and you are breaking down. Let me see if it actually closed back above. It could negate it. So it did actually close back. Let's see, close. It actually did close. So this pattern is not the prettiest anymore. Sorry about that. I might hit the mic there. But nonetheless, we are making a bearish consolidation below it. But we did close back above it. So right here. So let me see if I can draw this in a little more cleaner. It's not really a clear, clean head and shoulder right now because it did close back above it briefly. Not much, but it still could be in play. I mean, as long as it stays below this neckline, I would give it the benefit of the doubt that it could play out. But right now, like I said, it's a wild card because of the Wednesday FOMC meeting. So, but that's the cues at the moment. Just something to look for. Let's see if we can get back above this neckline. If it does play out, your downside is roughly 101.88 in that area. But let's see how it all plays out. Let's look at the cues very quickly. Pretty much been acting strong the last day or two because of Apple. It's been acting very nicely, and I will go over the Apple chart very soon. We did gap down. We pretty much retraced and retesting the double top. So the Qs are hanging in there. They've recovered for the most part. So you have to tip your hat to it. And pretty much did pierce the highs and closed right there. So let's see if it can make a base and bust through it to make new highs. And I think that could be a scenario. That's why I'm not all in short at the moment. I'm waiting for another pattern, waiting for another, maybe perhaps a newer level to hit. Maybe the 1700 and the XPX, a pierce of it, coincide with the 172 on the SPY. That is my spot, actually. So let's see how it plays out. Let's go look at Apple. Apple, sure enough, after beautiful earnings, made a nice base. Let's zoom it out. Okay, let's see exactly what happened. Had a nice retest of this 388 pivot, pretty much. Made a little bit of a higher low. Went to the 20, consolidated beautifully, went to the next moving average, pulled back, and this was earnings. Caught this beautiful red line. This was beautiful. This is a beautiful pivot point. See how it always, this is like kind of the midpoint. See how it always bounces, that point, and then bounces and breaks down, and got through it and bounced there again. See how many times this is a very important support. Flush through it, resistance, support again. See how this red line that's why I made it red. It's just such an important level. And it's funny how before earnings it closed right at that level. It's like the make or break point. And sure enough, earnings were great. Looks like we gapped above this previous pivot. So that's a beautiful gap play, and see how it's support now on the way down. So let me just draw this in really quickly. This was the previous pivot. Gapped above it, so that's a gap play. Once you gap above a level, that should be now support on the way down. Sure enough, you consolidate on that level. 3 days, beautiful time count, and another 3-day move. Right now, in the more near term, it is heading for the 200, and that's going to be solid resistance. Okay, guys. But if you do measure out this bigger pattern, it could play out as an inverse head and shoulders. It's hard to see it on the daily chart, but I'll go to the weekly chart and I will show you what I'm looking at. If the market does pop in the coming days because of the FOMC, I do think it has a chance to hit the 470 area. Okay, guys, in this general vicinity. It also coincides with the I believe a pivot top over here, a gap window. Let's see. Let me get rid of this. Let's see. Pretty much. Let me draw this in. Coincides with this gap window, pivot high. And that's pretty much your bullseye target at the moment. I mean, you're gonna pause here. You already paused at this pivot point here, right? At the 457, and then your next pivot is 465, and then 469, and then roughly 480. But you've already broken this trend line. Let me make this trend line. Well, let me just show you as an inverse head and shoulder. That's what I'm kind of looking at in the bigger time frame. You can consider it as an inverse head and shoulder, and that's what I called out many months ago. But it didn't look like it was going to play out. But it does look like it could be playing out right here. Let me just get rid of some of these, because my computer is kind of lagging at the moment. Let me see if I can close some of these windows. And see. Give me 1 second, guys. Oops. I don't want to do that because it's stalling out here on my computer. Let's see if I can close some of these. See if that even helps. I need those. Okay. Still kind of trying to get this weekly chart of Apple to come up and see. I have run 16 minutes on this video already, so maybe just does not want to let me go any longer. Guys, if I'm gonna call it a day. Sorry, I wanted to go through Google and LinkedIn and Tesla, but it doesn't seem like my computer's letting me at the moment. So maybe I'll do a later video later in this evening if I have time. But I'm gonna call it for the evening at the moment. On the weekly chart, you could clearly see an inverse head and shoulder, and we are pretty much testing at that neckline. So let's see where the week closes and see if we can close above that neckline.